Gold drops 6%, silver plunges 14%. In historic metals sell-off, as if I didn't tell you, just a couple of days ago, re-roll the intro, watch the last 2-3 videos. I told you, all of you guys who are on the hype train, you're gonna get rinsed as usual. But that's not a surprise. Let's go through the details and let's see why the sell-off, it's not stopping, it's continuing, and it will accelerate because there are more losers that they have to lose money on the market. Just look at this. The spot gold individually fell 6% on 3 different candles. This is not 15 small candles, individual investors taking profits. No. All the individual investors got rinsed by a couple of institutions who simply dumped the prices. And while the gold is a little more stable, look at what actually happened with the silver, where actually the biggest hypers, people who held silver just to break even around 15 years during the previous bump in whatever years was it. Look at this. The silver dumped 14% on no news, entering into the bear market territory. Okay, this is very important because if you remember, both of these metals didn't increase in value because there was higher demand or there was more value behind the silver and the gold. No, all because it was related to the hype. And if these can actually bump and go up 50, 100, 2, 3, 400% last year up to today without any particular reason, remember they can fall 2, 3, 4, 5, 600% without any reason as well. This is why you shouldn't be surprised if one day you wake up, you open your portfolio and you see that you're actually down, even though you was up for the last 3 months. Pay very close attention. The liquidations are triggered by major long extended positions. Same people who use leverage on the crypto market or stock market with 150, 500x leverage, trying to go extremely long for extremely long period of time, effectively are going liquidated by showing on the heat map. And this is probably one of the funniest things, because if before these people were going extremely long on the crypto market and they were liquidated, now these people moved and going long on the precious metals and they got liquidated again. So the game is the same. Different players, different rules, the liquidations are remaining the same. And the problem with the gold is effectively a lower volatility, lower liquidity asset versus the crypto market. What this means? This means that if people who got usually liquidated on the crypto market going long, right, the price could and will retrieve faster back up because there are many people doing so. On the precious metals market, usually you will see either institutional investors, countries, governments, or some individuals buying up. But when the market retrieves down, there is no enough liquid, there is no new money coming in. Because the country A, B, and C already purchased $100 million, for example, and they're not going to be buying anytime soon, right? They stash the gold, they're not trading, and this was actually help the price to be prompted to the higher levels. But when there is a sell-off and when the gold plunges, 20, 25, 30, 40%, there won't be new buyers to push the gold price up. The lack of liquidity. And also, like I mentioned, the volatility also is much lower simply because there are not much traders. Most people are buying up the gold because they want to hold the gold because they have money, they don't know what's going on, right? They don't want to risk something else. So most likely these people won't be buying and won't be having extra funds, dry powder to buy these dips to retrieve the prices to the previous levels. This is what actually happened 20 plus years ago. Like I mentioned earlier, the people who were buying silver at the prices of 50s, 60s, and the silver dropped to 12, 10, and these people waited 20 plus years just to break even last year. Imagine this. What the heck is happening? What kind of trading you guys doing when you have to wait 20 plus years, a third, a quarter, a half of your life to wait just to break even on your position, not to make money? This is how bad the situation with all these precious metals is, especially when some people are just trying to make a quick money, trying to day trade or swing trade some of this, which, like I mentioned, it's extremely risky because there's lack of liquidity. There's no new money coming in to push the prices back up. People who were interested, institutions who were interested, countries who were interested, they already bought, they stashed the gold and they're waiting. Okay, they'll not be looking for them it's the precious metals. It's a symbol of parking the funds, protection. It's not trading appreciation, making quick gains. No, for you, maybe you tried, you got rinsed. Now it's time to do the recap. Okay, this is why you need to understand that the lower the liquidity of these precious metals is, the bigger the dips and the sell-offs. This is why you got almost 3x difference in the sell-off between the gold and silver. You don't want me to go even further to the lower and lower and lower liquidity place, which could be palladium, which could be copper, where the sell-offs will be greater. Less people are trading, more people own majority of it, so the decision for them to sell will trigger even greater sell-offs. But of course, Peter Schiff is bullish, and he called it is a buying opportunity. This guy, don't get me even started with this guy, okay? He's been holding this gold forever. He's been missing out on Bitcoin and crypto forever. He's been missing on stock market forever. So it's okay. It's his thing. Let him play his own game. But like I said, the lower the liquidity, remember this formula. Next time when you try to hype and next time when you try to capitalize on some of these trends, the lower the liquidity in these precious metals is, the bigger and the deeper the sell-off will be. And the lower the guarantee is that the prices that you enter will go up enough for you to at least break even. Not talking about making money at all on this particular settlement, okay? Because the idea here is that institutions who bought up the gold, who retrieved the prices to the new highs in 2025, were not buying to make money. They were buying to free themselves from the organization from the United States, retrieve them and their US bonds, US Treasuries as investment, and protecting their independence in a way in which they can contract and transact and cash out their investments. Because a lot of these countries from the Europe, BRICS, whatsoever, they own US Treasuries, they own US bonds. They wanted to sell them, and if they're in bad international relationships with the US can freeze their assets and they will not be able to sell, and they essentially are locked and they're freezing their own funds. This was the reason why a lot of these countries pushed the prices of the gold, because they wanted to have a free exit strategy. And this is where all the individual investors came in to the show with completely different intentions, and this is why they got rinsed.